So step number one, we go to the first 5-minute candle at 9:30 a.m. and mark the high and low. Now, step number two, we want to patiently wait on the 1-minute chart until we get a fair value gap. And as you can see right here, a fair value gap was created outside of the range. This is the most important part of this strategy. And if you just trade every time we get a little wick above, this strategy isn't going to work for you because we need that force to tell us who is really in control. So at this time, you could then enter the market. You would put your stop loss under the displacement candle, and you would just target that fixed 2-to-1 risk to reward. And again, sit back and let the market do the heavy lifting for you. Now, sometimes the market can take a little while to go to the entry, but even on days like this, I mean, it's really not that bad. This was in 18 minutes. So now the profit is up to $2,485 just trading one single NASDAQ contract, and that was in less than 1 hour of work. We're at about 29 minutes of total trading at this time. And again, we go to the next trading day, 9:30 a.m. candle, and you just mark the high and low. Yes, it is literally that stupid simple. Then we go down to our 1-minute time frame, and we are going to patiently wait and not do anything until the market hits into our level. Now, if you notice right here, we did not create a fair value gap. So in this example, you would want to wait to see if we retest the range, and if we do, what happens? Do we create a fair value gap away from it? And the answer is yes. So this gives you more entries while maintaining the same goal, which is knowing who's in control. So again, if we break out of the range and don't create a fair value gap, once the market hits back into the range, if a fair value gap is created off of the range, this shows us that the market is going to likely continue. And at that time, you could enter a trade. Now, this is a short or a sell. So you would enter a trade right here, and you would put your stop loss above the original candle that broke through the range and closed through it. So not the candle that created the fair value gap, but the one that closed through the range. This is really important. Now, in this example, it's not much difference, but some examples it will be. So make sure that you do that correctly. Then, just like the other trades, we're going to go for a 2-to-1 risk to reward ratio. So on this trade, we'd be risking about $600 to make $1,300. And then you would just let the trade do the heavy lifting for you. Now, as you can see in this example, this is where a lot of you guys will make mistakes that keep you unprofitable. You'll get scared and think that just because the trade didn't go straight to your target, that you should exit the trade. But it's very, very important that you stay consistent, guys. Understand that no matter what, you could have the best strategy in the world, and if you don't stay consistent with it and trust it, it doesn't matter because you'll end up hesitating or overtrading or exiting trades early. But as you can see, the trade played out, and this is why you have to trust your system. This trade took about 23 minutes, and we added another $1,400 of profit. So this is $3,800 in less than a full hour of trading over 3 trading days. And not to mention, this was done with one NASDAQ contract, which can be traded on a $50K prop firm account. And depending on what firm you're trading with, this costs $50 or less. Now, I get asked a lot which prop firm to go with, so I left a link in the description that goes to Apex, which is the biggest firm, and it gets you up to 80% off of your prop firm account. So I'll leave that down in the description in case you guys want to use this strategy for prop firms. And to be clear, you only need to make $3,000 on that 50K account to pass the challenge. So just in these 3 days alone, you would have already passed the challenge. So here we are on the next trading day. Again, you just mark out the high and the low of the first 5-minute candle. And then we go to our 1-minute chart and patiently wait for a break of one of these levels. As you can see in this example, we broke through it almost immediately and we created a fair value gap. So we would enter the trade and put our stop loss above the candle that broke through the level and target a fixed 2-to-1 risk to reward. On this trade, we'd be risking $665 to make $1,320. So you just want to patiently wait. Sometimes the market will take a second to do its thing, but you have to sit back and let the market do the work for you. Now, in this example, you see that we made $1,300 in about 1,500 minutes. Not bad if you ask me. And this brings our total profit up to $5,145 over a total of 4 trading days and right around an hour worth of work. So again, we mark out the high and the low of the first 5-minute candle. Now, I know this is boring and repetitive, but honestly, guys, that is what makes profitable trading. And my goal is to make as many profitable traders as possible. So I know this may not be the most fancy, advanced strategy, but in my experience, stupid simple always wins. So then we patiently wait until the level is hit. And as you can see, the market hits this level and we create a fair value gap. Now, this is a smaller fair value gap, and it's important you don't hesitate on these trades. You have to stay mechanical because the candle did close above the level and a fair value gap was created. So this time we would enter the trade with our stop loss under that candle that closed outside of the range.